Last week, USD/JPY, EUR/JPY, AUD/JPY, GBP/JPY, 10-year JGB yield, and gold all reached their projected convergence levels. Congratulations to those who were able to take profits. Hello, everyone. This is our weekly financial market outlook for the week of February 23rd through February 27th, 2026. This week, markets are facing two major sources of uncertainty: President Donald Trump's tariff policy, and rising geopolitical tensions involving Iran. Before we go further, let us clarify how this forecast is constructed. The projections in this video are based on a statistical convergence model using over 100 weeks of historical data across foreign exchange, interest rates, and 17 global financial markets, with AI-assisted analysis. This model does not predict geopolitical events or policy decisions. Instead, it identifies where prices tend to stabilize over time, while political and geopolitical developments influence the volatility and the path prices take. Based on these statistical dynamics, here's where the market tends to converge this week. The projected convergence levels for this week are: USD/JPY is 154 yen and 78 sen. EUR/JPY is 181 yen and 72 sen. AUD/JPY is 108 yen and 38 sen. GBP/JPY is 208 yen and 98 sen. The Nikkei 225 is 53,048 yen. The Dow Jones is $49,135. 10-year JGB yield is 2.18%. Gold is $5,030. These levels represent statistical stabilization zones, not directional predictions. After the U.S. Supreme Court invalidated most of the tariff measures introduced last year, President Trump immediately signed a proclamation imposing a uniform 10% tariff on global imports. The following day, he went on to announce via social media that the tariff rate would be raised to 15%. The key issue now is whether the administration can extend these tariffs for an additional 150 days without congressional approval. Even if such authority is not granted, it is widely seen as likely that the administration would proceed by invoking Section 301 of the Trade Act and Section 232 of the Trade Expansion Act, conducting product-by-product investigations and imposing targeted tariffs. Through this approach, President Donald Trump would, in effect, be able to move overall tariff levels closer to the outcomes he is seeking. If a uniform 15% tariff is implemented, estimates suggest that the effective average U.S. tariff rate would rise significantly above its current level. In the short term, higher tariff revenue may support government finances. However, at the same time, there is a growing risk that a wave of lawsuits could follow, as companies that paid now invalidated excess tariffs seek refunds through the courts. In fact, stocks of companies seen as potential beneficiaries of tariff refunds have already shown upward momentum. While equity markets initially reacted positively to the 10% tariff announcement, the move toward 15%, combined with limited long-term economic impact, suggests that markets are likely to enter a nervous consolidation phase this week. President Trump has wielded tariffs much like Sun Wukong's magical staff, a flexible and powerful tool used strategically in diplomacy and economic security negotiations. As the economic impact of tariffs weakens, concerns are growing that military pressure on countries such as Iran and China could intensify. In recent days, U.S. forces have increased their military presence in the Middle East amid reports of internal repression by the Iranian government. Nuclear negotiations between the U.S. and Iran collapsed on February 17. effectively leaving the decision of military action in the hands of the president. Gold has broken above $5,000, reaching as high as $5,135 in after-hours trading on the 22nd. Crude oil prices have also been rising steadily into the high $60 range. The nuclear-powered aircraft carrier USS Abraham Lincoln has already been deployed to the Persian Gulf. In addition, the USS Gerald R. Ford Carrier Strike Group, which recently carried out a successful surprise operation in Venezuela, has arrived in the Mediterranean Sea off the coast of Cyprus. Taken together, these developments suggest that the United States has largely completed its military preparations for a potential strike. If the United States were to launch a military strike on Iran, equity markets would likely experience a sharp initial sell-off. From there, two scenarios emerge. The first scenario is a short conflict, where Iran loses its ability to respond effectively in the initial phase. In this case, markets could rebound quickly and potentially move toward new highs. The second scenario involves a prolonged conflict, with effective retaliation by Iran and a potential blockade of the Strait of Hormuz. This would likely trigger a global market crash. Over 90% of Japan's crude oil imports pass through the Strait of Hormuz. For Japan, this route is an energy lifeline. A temporary blockade would likely cause a sharp decline in the Nikkei. However, the prevailing view is that Iran lacks the military capability to maintain a prolonged blockade of the Strait of Hormuz. Even if a blockade were to occur, it is widely expected to last no more than several days to about 1 week. Without substantial military support from China or Russia, sustaining a longer disruption would be extremely difficult. In the case of a short-term blockade, Japan's strategic petroleum reserves would be sufficient to absorb the shock. Under such circumstances, a sharp market sell-off could potentially present an attractive buying opportunity. In war, it is impossible to predict what may happen unexpectedly. There is growing speculation about the possibility of a joint operation with Israel, aimed at weakening Iran's ruling establishment, potentially targeting the supreme leader, Ali Khamenei. Whether such an action would accelerate democratization in Iran, or instead push the country into prolonged instability and chaos, remains highly uncertain. A broader scenario has also been discussed: Iran's democratization, the severing of Iran's military support for Russia, and ultimately, an end to the war in Ukraine. The question is whether this vision, as outlined by President Donald Trump, can truly become reality. The coming weeks may represent a major turning point in global history. Please note that the market outlook presented here is estimated using a stable convergence model based on statistical analysis. We accept no responsibility for any investment results derived from this forecast. That concludes this week's Global Financial Market Weekly Outlook. Thank you very much for watching until the end.